Beef Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at HaneyFarms.com. It's time again for another edition of the Beef Market Update on RealAgriculture.com with Ann Dunford. Welcome today, Ann.
Hi, Sean.
Okay, Ann, I know you're going to have a boatload of positive news this week for all sections of the cattle industry. Let's start with U.S. cattle on feed report that is coming the end of this week. What are we expecting?
Okay, well, first of all, I got to go back. I don't think your previous statement's even possible. But anyways, we've got a cattle on feed report coming out of the U.S. On Friday for May 1 inventory numbers. I think what's going to get, or it's already getting most of the attention, is, of course, the April placement number. There's quite a wide range from trader guesstimates, but going into the report, the average of the traders' guesses is coming in down 12%. So that'll be the third month this year, so 3 months out of 4 where we've seen smaller placements or expected to see smaller placements. And again, I think just adds more fuel to the fire as we move forward in regards to just overall tighter inventory numbers in feed yards. Remember last year we thought this would happen, but it didn't because of the drought and all the extra placements that came in. Now some rains, not everywhere's got all the rain they want in the U.S., but most certainly some of those areas that were negatively impacted last year have been getting some moisture. So this is kind of the scenario I think we thought we'd see last year with these smaller placements.
Smaller placements mean tighter supply, maybe better prices?
Well, all those things going forward. So better prices, tighter supplies mean feeder cattle prices are going to be strong and stronger. It likely means the deferred months on the live cattle futures market start to get more bullish, see some more strength as we get out into late this year and early 2013. But the big question mark is in that environment of paying more but maybe getting more, what's the margin for the cattle feeder, what's the margin for the packer? So, not ready to say it's not possible to make any money through the system, but most certainly margins will be tight.
What's the reason for such a wide range in the expectations?
Well, I think there's some squabble out there in regards to what areas maybe are drier and possibly going to move a few more cattle into feed yards and what areas aren't. And of course, one of the areas we're starting to see is in those winter wheat pasture areas or anywhere that would have wheat. Of course, cattle prices moving faster than wheat prices, so some producers keeping cattle out longer. So that normally would maybe be moving into the feed yard. So I think that's why we got a bit of a range, although that's not a big surprise, Sean. We often have that going into these reports.
Well, and the area of the business that all of our viewers are very concerned about is how much money the packer is or isn't making. Packers have started to turn a profit in some areas.
Yeah, well, U.S. packers, and of course, it's been close to that line of on the positive side and on the negative side. So they've been kind of flirting back and forth the last couple of weeks. Now, cash cattle prices still stayed really solid in the U.S. last week. Didn't trade as many cattle as what they thought. So still, this week you've still kind of got that Mexican standoff, if you will. The Texas cattle feeders are looking for 122 or better, and the packers, I know it's only midweek, but they're out offering 117. So that's the same scenario we had last week. So, it'll be a big, where it saws off will be a big indicator of where they make or don't make money. Now here in Canada, of course, the Canadian packer paid a little bit more money last week. Basis narrowed. That's very typical if you watch basis levels here in Canada as we go into May. It's typically our narrowest month of the year. So that is coming together quite nicely. Canadian dollar off this morning pretty good, yesterday and today. Lots of trouble in Europe. Greece again, how long can they have the headlines, but they still are this morning. And that's meant U.S. dollar strength and the Canadian dollar weakness. So that'll lend some support to fat cattle prices and the price that the Canadian packer is selling his beef for.
We could have an interesting standoff between feeders and packers in the sense that the summer is, as well documented, is not very good profit wise. We have high expectation. We're hoping for much higher prices in the fall. There could be a real interesting standoff on forward contracting cattle into the fall and trying to get feeders trying to get as high a prices as possible.
Yeah, and I think the clout's going to be in his court in regards to the seller's court, the feeder's court, in regards to negotiating those basis levels. And And I think just judging by these tighter supplies that we're also seeing now south of the 49th parallel, that you're also going to have American packers, I think, showing some interest as well, or showing more interest than they have been. So it'll be, I think a situation where I think we can be firm on asking prices for basis levels. But having said that, once given the opportunity, going back to our statements over the last several months, Sean, have a game plan, be ready to pounce, because I'm still expecting this market to be very, very volatile.
What about forward contracting of feeder cattle? Are you hearing much? Is there much transactions? Have they, big prices at all?
Well, same thing there. Basis levels are still not shoring up the way we think. Typically, if you look at historic feeder cattle basis, it narrows quite nicely into August and September. So we haven't got those levels being offered in the marketplace today just yet. Again, maybe they don't get there, but I think there's a good chance that levels narrow up from here. So having said that, I think there's quite a bit of tire kicking going on, but not a lot of deal signing going on.
How steamy do you think the yearling market's going to be?
We've got a situation where it looks like we're going to have a pretty big corn crop. U.S. Feed prices down. Still lots of questions about what's going on here in Western Canada from a feed perspective as we head into new crop later this year. But the bottom line is we're going to have some very strong buying demand from beyond Western Canada. The last couple of years, we've kept all the cattle in Western Canada and fed them here because of our feed cost advantage. Well, I'll tell you that that's changing real quick. So I do think you'll see American buyers on the Canadian scene this fall, and just how torquey that gets will depend on where the futures market into 2013 tells them they can lay these cattle off. So lots of unknowns ahead, but most certainly it's shaping up for some higher feeder cattle prices ahead.
Yeah, with the lack of profit in the spring and what summer is looking like, there could be potentially a little bit of lack of gunpowder when it comes to feeder purchase season.
Right. This is going to sort those out that have been able to access more credit or capital, and those that haven't been, or the losses of and those that maybe have contracted or hedged at profits and those that didn't. So you can't put everybody in the same bucket right now, and I do think this next period is going to sort some of those out. Maybe some that just don't want to play in this kind of high risk ball game, which looks like what is exactly what it's going to be. So it's going to sort people out as far as who can play in this game and who doesn't want to or can't.
Okay, Ann. Well, that's great, and we'll talk to you again very, very soon.